Hey, good morning, everybody. It's your girl, Tonya Lady T, and this is going to be my Nuggets of Knowledge video. Y'all, today we're going to talk about credit real quickly. I want to go through this really quickly. A good source of learning about credit is credit.com, and there are probably a lot of plethora of websites that, can talk to you about credit. I also listen to a show on Sirius-XM channel 126 every Saturday around, I think it comes on at 10 a.m. if I'm not mistaken. Yeah, the Hutt show. He is a tax attorney. He is a certified account. This man is awesome. He gives such awesome advice. If you're a small business owner, matter of fact, I was sleeping on him last year because I know better now. So I know what I'm eligible for as far as filing my taxes with now that I have a income with AdSense. So trust and believe, your girls are saving her receipts this year. But anyway, like I said, as you learn, you know. But anyway, I'm on the credit.com website, and I just want to, again, talk about increasing your credit score instantly. And I learned this through Hutt, and it did work, y'all. No, this is not clickbait. This actually worked, and it's so simple. But anyway, I wanted to talk to some of you all about what is a FICO score. What is FICO? What does that mean? How does that relate to your credit? So again, I'm on credit.com, and they just do a really good, simple breakdown of what FICO stands for and what is a FICO score, i.e. your credit score. Okay, a FICO credit score is a credit score developed by FICO, a company that specializes in what's known as predictive analytics, which means they take information and analyze it to predict what likely is to happen. In the case of a credit score, FICO looks at a range of credit information and uses that to create a score that helps lenders predict consumer behavior, such as how likely someone is to pay their bills on time or not, or whether they are able to handle a larger credit line. Scores developed by FICO can also be used to forecast which accounts are most likely to end up included in bankruptcy, or which ones will most be profitable. And credit-based insurance scores, which they also create, are used to help insurance companies identify which customers are least likely to file claims. What does FICO stand for? The name FICO comes from the company's original name, the Fair Isaac Company. It was often shortened to FICO and finally became the company's official name several years ago. To create credit scores, they use information provided by one of the three major reporting agencies. So these are your three major credit bureaus, if you will, that assign your score, if you will. And that agency is Equifax, Experian, and TransUnion. But FICO itself is not a credit reporting agency. They just measure. Okay? It's your Equifax and your Experian or TransUnion. They're the ones who assign your credit score to value and deem to lenders your credit worthiness. Are they willing to, this is a score that would determine and let lenders know, okay, we're willing to take a risk because this person is good for paying back their credit card account. They know how to use credit. They know how to utilize it. Okay. You also have a FICO score range. Okay. And there are actually dozens of FICO scores, with each version serving a different purpose. Generally, the FICO score range is 300 to 850. So 3 at the lowest, 850 being the highest credit score that you can attain. With the higher number, of course, representing less risk to the lender or insurer. So in other words, like I just saying earlier, your credit score will determine or give a, you know, signal to an insurer or a lender, okay, I can trust that she will pay back this debt. Okay. What is a good FICO score? Consumers with excellent FICO scores, usually around 760, remember 850 being the highest, 760 FICO score range is higher, though every lender has different standards, are likely to get the best rates when they borrow, as well as the best discounts on insurance. So again, the higher your credit score, the lower your interest rate on whatever you're getting financed, whether it be credit card, a mortgage, i.e. And again, I'm doing all this because I didn't learn about money and how to respect it till after I done jacked my credit up. So, you know, it's one of those things where, you know, when you went to college so you can get through the class. You know, you know, some of us let that information sink in. But some of us just, yeah, we knew it existed, but, you know, when we went and did our little credit deal, we were like, yeah, we forgot the bill was going to come in after we, you know, yeah, exhausted that credit. Okay, anyway, getting back to what I was saying. So, you know, in a nutshell, that's what your credit score, your FICO score is. Okay. And then the last thing I want to touch into is what goes into FICO scores. This is the criteria in which you are measured. Okay, there are 5 main factors that go into the FICO score, and they each have a different effect on your score. Okay, and here's the breakdown. Your payment history accounts for 35% of your score. So that means, you know, if you pay, you know, late all the time after that 30-day period, because, you know, you get grace periods. Let's say your payment is due on the 20th, okay? Whatever company you're borrowing from, let's say the payment is due on the 20th, and you have up until, I don't know, the 25th to pay it without a late fee. But then if it rolls over and you pay it past the 20th of the next month, so that means you've utilized 30 whole days, because they send you a bill prior to what, 10 days maybe before the due date. Some companies do. So now you've already been notified that your payment is due on the 20th. You got to the 25th for whatever reason, you don't get charged a late fee. But if you wait till the next month after the 20th, then that means when they report to the credit bureaus, you're delinquent. That means you paid 30 days after your due date. So then that's when they report a delinquency. Just note that. So, and then, so that again, that's part of your payment history. Debt amount owed. So that's your debt to income ratio. How much debt do you owe on that credit card? And normally it's 30%. Okay, so 30% of your FICO score is based on the debt amounts that you owe. And then with that same 30%, this is another thing that I learned listening to Lou Hutt. Always, whatever your credit limit is, let's say you got $1,000 credit limit on a MasterCard. We'll always try to stay within that 30% usage. In other words, you know, use 300 out of that 1,000 and try to keep it there. Because if you go over that 30%, then that significantly reduces your credit score. And I know some of us, you know, if we got a credit card, we got to make a major purchase. Let's say we got to get 2 new tires. But, you know, if you like me, you want to go and get a full set. So it might run you about $500 or $600. You know, you might have to charge that on your credit card if you don't want to pull that out of your savings. And then the next time, maybe if you get paid, if you can swing it, pay that off. Or either maybe you can't pay the whole $500 or $600 off on your next pay period. Maybe pay $250 one pay period and pay $250 the other. And if you get it done within that 30-day period, hey, you've paid it off and you may escape finance charges. But again, that's another whole different situation. the way my credit cards that I have are set up, it'll let me know how much to pay in to that credit card before a certain date, before the finances kick in. And we can thank Obama for that. Now, that was something awesome that, you know, when all that housing market mess went down, President Obama and his administration went in there and put a lot of consumer advocacy things in to protect us from predatory lending, truth and disclosure. I mean, he did an awesome job. His administration did an awesome job, but of course, a lot of that stuff is being repealed. But anyway, we hope and pray that the credit cards companies still utilize that, because I thought that is so awesome. Because what it does, again, my credit cards will let me know, okay, if you make the minimum payment, this is how long it's going to take you to pay this debt out. I mean, and the way it's set up, really credit cards are set up to make you owe them forever. So it's when you can do over and beyond the minimum payment that gets you out of the red in credit card debt. But again, that's a whole nother situation. But again, I just wanted to talk a little bit about credit. Okay, and the third thing that's part of your 5 main factors for determining your credit score is the age of your credit. That accounts for 15%. So how old are these credit card accounts that you have? And then whatever new credit inquiries, that accounts for 10%. So let's say you go to Walmart and there's the person standing, hey, do you have a Walmart credit card? If you sign up for it and get approved, you get 15% off your purchase today, whatever. So, you know, that's considered a new inquiry. Or let's say you're looking to establish credit anywhere. You're trying to get a home, you're trying to get a car. That's considered a new inquiry. That company has to go in and tap into your credit to see what your credit worthiness is. So an inquiry from another company, or sometimes if you're trying to move into a new apartment or rent or something like that, a lot of places now are doing credit checks, and they make you pay a credit check fee. You know, some are 30, some are 50. And what that does is create a new inquiry. So that sometimes can also affect your credit score, and that accounts for 10%. And then the other 10%, it just says a mix of accounts and types of credit, revolving credit, you know, that type of stuff, secured credit, unsecured credit, whatever that is. So anyway, those are the 5 major factors that, you know, that deal with giving you a FICO credit score. Okay, so anyway, now that I've got all that out of the way, but again, I think it's important because I'm doing this also for myself, because I can always go back to this video. That's pretty much the basic. Like I said, go to credit.com if you want to know anything more, get more in detail about it, understand it more as it's applicable to your life. Do that. But again, the key things that come out of here is, you know, in order to establish good credit worthiness to lenders and or insurers, your credit score, excellent credit is considered 760 up to 850, which is the highest you can attain. So getting back to what you can do to raise your credit score instantly, and this is, like I said, this worked for Tonya, and it's so simple. Was listening again to Lou Hutt. Was talking about credit worthiness, people trying to get homes, what's required, blah blah blah. How banks, if you got credit cards, the banks are gonna ask you for your credit card statements, because they want to make sure, is she going to Burger King every week using her credit card, you know, stuff like that. They need to see how you utilize your credit card for what purpose. Now, if they see you making major purchases, and I know a lot of people will use their credit cards, you know, for grocery shopping, like, you know, they spend $100, $200 on grocery shopping, and then they pay it back. It's like you're able to utilize that credit money and escape finance charges, and you pay it off within a week or two. A lot of people use credit that way, and it helps to continue to establish their credit, showing that they can pay off stuff. But anyway, just keep that in mind. Yeah, the bank is going to get all into your business and with your credit cards. What are you using it for? You know. So anyway, Again, went to listening to Lou Hutt. He said, you know, here's something that you can do to instantly increase your credit score. Your name. Your name. How about that? Now, if you're a person that's already got a mortgage and you and whatever your name is on your mortgage, then mimic that with all your credit cards. And I thought, oh man, I don't want to have to do that because I got 4 credit cards, okay? So I'm like, daggone, I don't want to have to do that. But trust me, it's worth it. For instance, I'm going to just show y'all. My full name is Tonya Lanice Howell, okay? Now, when you're establishing credit or you're getting credit cards, whether it's in a clothing store, major credit card, your debit card, all that, make sure your name is the same on all forms of credit. Like I said, if you've got a mortgage, you don't want to have to go through all that to change that. So whatever your name is on your mortgage, if it's Penny T. Howell or Penny Howell or Penny L. Howell, whatever the case is, make sure it's like that on all your credit card and debit card accounts. Because what that does, it syncs everything together. And when your credit score looks at that, he can explain it better than I can. In other words, it syncs everything together and it's cleaner and neater. And let me tell you, I had a credit card that had Tonya L. Howell on it. I had one that had Tonya Lanice Howell. I had one that was just Tonya Howell. And then I had one that was Tonya L. Howell. So in other words, I had credit cards with different forms of my name. So what I decided to do is go in on all my credit cards. I called and he said, just simply call up your creditor and say, hey, look, I need to update, correct, or whatever, the name on my credit account. And then, of course, they'll have to issue you a new credit card. Same account number and all that. They just issue you a new card with your name on there. And then once you do all that and everything is synced, and again, you decide how you want it to be. If you want it to be just your first and last name, your middle name, your first and middle name spelled out, however you want to do it, just make sure that whatever you do, that everything is the same. And let me tell y'all something. I did that, and he said, okay, once you do that and you get, he said, try to do it all on the same day. About 45 days later, I have a credit card that they always update me on my FICO score, my credit score. So I went 45 days later because he said sometimes it'll take a full 30 days to cycle, and sometimes it'll take even longer. It might be 60 days. And y'all, I promise you, I went and checked my credit score after I did my name change, and my credit score instantly increased by 27 points. Do you hear what I'm saying to you? I am not even lying, y'all. And I wish I could show y'all what it was before and what it is after. But I got too much personal information, and I ain't trying to risk nothing. I know I could black this out, but that's stuff I want to keep. I ain't gonna black out everything just to show y'all. But and I need that paperwork for my files when I get ready to start really truly applying for a house and doing all that stuff. But trust and believe, when I trust your girl, Lady T, if you do that, again, make everything on your credit card accounts, your debit card accounts, make your name be the same on all of them across the board. And I'm telling you, I had an instant credit score raise of 27 points. And I'm proud to say, and let me just say this. My credit used to be so bad back in the day when I was in my 20s because I didn't respect money. I didn't respect debt. And I found myself in a bad pickle, let me tell you. And my credit score was like right at close to just 500, just barely 500, 505. That's how bad my credit was. I mean, I couldn't even get a snicker bar credit. It was horrible. It was horrible. But through educating myself, through respecting money, through learning how to save, through knowing how to utilize that 30%, stay within that 30%. Now, of course, I've got one of my credit cards is way over the 30%, but you know, it is what it is. But I'm working my way. And now, you know, I'll be upfront and honest and tell y'all that my credit score now is 720. But it took me a while to get there. It took me a while to get there. And like I said, I'm trying to get to that 760 and higher so that I can do some things. And part of my score being lower is because, of course, I just financed a car back in November of 2016. And I've got 2.5 more years because I got that car financed for 4 years. My Ford is financed for 4 years. And I got another, 2 years and 4 more months, you know, to pay. So 2.5 years, just round it off. And I'll have my Ford paid off. But because of utilizing that full amount, of course, when you get something like that, which is considered a major finance, it caused my my FICO score to go down. It went down about 15. So it's 720 now, because it was like 730 something whenever I got my car financed. But anyway, again, I just wanted to share that with you. Knowledge is power. Again, nuggets of knowledge. This is something that everybody can do and see instant results. And that's why I wanted to talk about this today, is that, you know, you can instantly raise your credit score by just simply making sure that your name is the same on all your credit accounts and debit accounts. And it works. It's not a gimmick. It actually works. And like I said, tune in to Lou Hutt on Sirius XM channel 126, The Urban View, on Saturdays at 10 a.m. And then there's a another lady that comes on after him, and her name is Jennifer Hammond, and she's a real estate guru, and she just talks about a wealth of information for people who are trying to go into businesses and buy properties to be landlords, for people who want to just do it for investment purposes, people who are first-time homeowners, second-time owners, third-time owner. Honey, let me tell you, I have got so many notes. So when I go to the bank within the next 2.5 years to say, hey, okay, I'm ready to buy a house. Here's my down payment. Okay, and I'm trying to do it with just 15 years financing. So again, and that just depends on what I find, what's out there at the time that I'm actually physically looking. So anyway, y'all, I've run my mouth long enough. I hope this was helpful to you. And like I said, these are just nuggets of knowledge that we can just learn from one another. And then again, some of y'all may be in finance. Some of y'all may can give or lean more to what I'm saying, or perhaps maybe correct what I'm saying. But again, it's just to open up the dialogue. But the main purpose of me coming on today is to let you know how you can instantly increase your credit score through just making sure that your name is the same across the board. But anyway, y'all, it's gonna be an end day today. It has been raining, and Lord have mercy, I pulled up my work email. Y'all, don't ever pull up your work email when you got other stuff to do, because what'll happen, you'll get sucked in and doing work. But anyway, I knew I had to work a little bit today anyway, so let me go on and knock that out and handle my business. But anyway, I want to thank y'all so much for your encouragement and getting on board with this. And like I said, I'll jump in and out whenever I can and do some nuggets for this month. And again, it's something that can help us all, you know, and that's what it is. We want to help one another so we can be better. Amen. So anyway, let me go. Thank you for listening to me, and may God bless you, and may the peace of the Lord be with you. Bye.